My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make money. My job's not just to entertain, it's also to educate and to teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Now, doesn't it feel like everybody's raising prices? I mean, that's one reason this market hasn't been in exactly great shape lately. Dow dipping 67 points. S&P advanced 0.13%, came up from the grade. NASDAQ inched up 0.11%. That did break a nasty down streak. Most of the time when we get hit with a price increase, we feel like we've been ripped off, right? It's natural. It's aggravating. It's also inflationary. So when too many companies raise prices at once, we start worrying that the Fed might have to slam the brakes on the economy in order to keep prices stable. The Fed can control a lot. But all of these price hikes are a great way for me, as a stock picker, to separate the wheat from the chaff. So let me teach you how. Why does it work? Because, see, you get to see which products we're willing to pay more for without much resistance. I regard this as not that inflationary. And then we look at which companies behind those products generally have stocks that we want to own. We don't want to pay too much for them. But that's what we're looking for, companies that can raise price and we barely notice. And today, a company that I never talk about is raising prices. We got really the perfect example, Microsoft. See, Microsoft announced that it's raising the price of Office 365 next year for the first time in a decade. Now, we're talking about price increases like 10 to 20%, but for most people, it will seem minimal because it's only $1 or $2 extra per month. That adds up very quickly, given that they've got 300 million users. Plus, nobody will complain. Why? Because this is enterprise software. So unless you're the gnome who does the purchasing for your company, you've got no reason to care. Honestly, Microsoft's added so many features to this subscription service since it was rolled out a decade ago that it does seem like a bargain to me. That price increase sent Microsoft stock soaring $6. Remember, this is not a small cap stock, to a new all-time high of $297 and change for closing at $296. And at these levels, Microsoft now has a $2.2 trillion valuation. 2.2. That's pretty close to another company that can put through painless price increases, the $2.4 billion titan that is Apple, and we're going to get to that one in a second. Microsoft gave us an education today. We keep hearing that we haven't had a 5% correction in more than 10 months. How many times have you heard that today? With the implications being that this market's due for a beatdown. But one reason why we haven't had a correction of any magnitude is that Microsoft stock, which is very big as part of the S&P, it just refuses to quit. This one's been the unsung hero of the entire bull market, especially its most recent phase. The stock is so big that when it rallies, as it has, it reminds me, almost football season, of an offensive lineman that won't let anyone in to hurt the Bulls' charge. Microsoft just quietly goes about its business, never being in the crosshairs of the government, any government really, or at least during this century. Have you ever heard Microsoft mentioned in the same breath as Facebook, Amazon, Alphabet, or even Apple, even though I could argue they're just as rapacious as those guys? But of course not. Nobody's investigating Microsoft for monopolistic practices. The government already came down on them for that 20 years ago. And since then, the company's, well, it's kind of warned that the theoretical white hat. It's not like they're putting a gun to your head and making you use Word or Outlook or Excel. Who needs to when they can slip you a free trial on pretty much every new PC? So let's circle back to the only company in the world that's actually larger than Microsoft, Apple. I'm not here to talk about the Apple store that got closed because of COVID. That's prurient and terrible. I'm talking about how Apple is able to put through a price increase and nobody cares. They don't even bother to yawn. One major reason, when you go to buy an iPhone, it's the carrier paying for the bulk of it if you do it that way, not you. Amazing, isn't it, that the company and the carrier take care of things, which means profitability galore for both. The former because you were hostage, Microsoft. The latter because you love it, Apple. It's not just the price increases of the phone that we are relatively indifferent about. How many services have you bought from Apple in the last 6 months? Have you ever noticed you're on the East Coast that your bill, the receipt, it comes at around 3:20 a.m.? I know because I'm up to see it. You're probably not. How many purchases have you made from the App Store? they take a nice cut. Again, we're talking about painless services where they could easily raise prices, and we wouldn't even notice because most of these subscriptions are incredible bargains anyway, and the bills are all automated. Unlike a price increase in the supermarket, totally infuriating, right? You don't hear much grousing about paying more for Apple. That's a big reason why the stock's so close to its 52-week high and why I'm always telling you to own it, not trade it. Unfortunately, Apple doesn't get much love from the analysts who follow it, except for Katie Huberty. The rest of them are kind of lukewarm. Why? I think a lot of them just can't. Oh, there's a nice piece by J.P. Morgan today, but they can't seem to understand the value proposition here. See, analysts are much more comfortable raising numbers for an enterprise-focused company, that means a company-focused company like Microsoft, because the enterprise business is seen as more sticky than the consumer business like Apple, even when you've got Apple's ridiculously high levels of customer satisfaction. In other words, when you have one of these, you're not going anywhere. And when you have one of these, you're not going anywhere either. All right, who else can you get away with the price increase right now at this very moment and no one would think it's extravagant? Well, to me, a natural one is Costco. Now, let's talk about this for a second, because, again, Costco hit an all-time high today. When we went to see them 2 years ago, I was struck not by how little they charge. It always surprises me. What really is amazing is not necessarily how little they charge, but how much they're willing to lose. I mean, when they want you in. They want dues payers. That's why you can get a bottle of Caymus there. I remember speaking about Caymus, one of my our staff's favorite, and I said to them, guys, you guys, this price is so low, you're not making any money. And they said, well, that's the point, Jim. That's the point. They may even sell Caymus less than it sells wholesale. And that makes you want to go there. Let me put this in perspective. I've had a lot of businesses, some good, some bad. But one of the craziest I had was a popcorn company. Now, we had a deal with Costco where we chose to lose money in order to make it up at the back end. Unfortunately, there was no back end. We went out of business. But that's why a Costco membership is such a great value and why you wouldn't blink if they wanted you to pay more, because they're selling it for less than everybody else can. What's even better, you know what? I was thinking, someone was saying the other day, Costco might put through a price increase in their membership. I don't even know how much it costs. I just buy it. I know that it's worth it. I know it's a bargain. No wonder the stock hit an all-time high today. Now, if you use this analysis, the analysis of a company that offers you an incredible bargain that you'd be willing to pay up for, or a bargain where you're not even aware of the price because it's such a steal, then I'm going to kill you right back to a stock that's been sneaking up. Yeah, the N in FANG. I'm going to take you back to Netflix, which everyone wrote off after that last quarter, which was not so hot. Now, this has become a forgotten stock, but I'm beginning to believe that it's going to be an unforgotten real soon, now that the company's been able to make some new productions free of COVID, or at least relatively free of COVID. Netflix is a stock that trades on hits, okay, hit content. The last quarterly conference call was totally joyless. It was a real chore to listen to. Why? Because very unlike Netflix, there wasn't anything to crow about. There were no major new productions they could rave about. There were no Ted Lassos, so to speak. Another Apple product that I'll gladly pay more for now that I've mellowed in my old age. My sister says, ooh, it's cute. I think it's better than that, but it is cute. That last one, the Christmas one, cute. Anyway, I think Netflix will tell a better story the next time it reports because the bargain will be more self-evident, and they'll once again start talking about their favorites. This last one was just like, I was listening to a widget. It was like, it was like they were like an appliance company. No, that's not true. Whirlpool's call was much more exciting. Finally, one more that's now hated, and I think hated unfairly. You know what I'm talking about? It's a river. It's a river in South America. There's Amazon. It's a stock that's down nearly 2% for the year, as it's viewed as the kind of company we'd only be willing to pay more for during a lockdown. To me, that is just poor judgment. We'll eventually start remembering that we love Amazon because Prime is a steal, which doesn't really change just because we're now willing to go to Macy's or Kohl's, two standouts in today's session. I want Andy Jassy to come on the show. He's been on it before. Why? Because he knows the value of Amazon Prime. He can also tell the value of Amazon Web Services. But I think the idea that Amazon Prime is a pandemic story is just wrong. It's a play on our instinct to get more for less. That's Amazon, and that's why it, too, is a buy. The bottom line, when you try to think of what's working in this market, I want you to look at it like this. I want you to ask yourself, would you be insensitive to a price increase if the company put one through? The companies that can raise price without infuriating you, go buy their stocks.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. Hashtag Mad Tweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.